When will the Bitcoin bull market end? We'll be looking at some historical price tendencies across cycles to answer that question, but also we're going to be looking at a lot of data science because the pi cycle top indicator has been really accurate in preceding and predicting these bull market tops. So we'll be talking about the data science part to it. We'll be talking about the historical situation as well, and also about the accelerated cycle that we may be seeing for Bitcoin right now. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. So if we look at the previous historical cycles, it's a very simple calculation because after the halving is when we tend to see a bull market peak, and this peak tends to occur several months after the halving. In fact, over a year, 518 days. And what's really interesting about that is that this 518 days mirrors the pre-halving period where we tend to typically bear market bottom. It's really fascinating to see this mirroring effect. And this mirroring effect doesn't just pertain to 2015, 2016, the 2017 cycle, but also pertains to this 2021, 2020 and 2019 cycle as well, because approximately 546 days after the halving is where we saw the bull market peak. And if you do this to mirror that, then we get quite close to that bear market bottom of 2018. So that mirroring effect is very true and alive and well. And if we were to just say that Bitcoin repeats history with a rally to new all-time highs and peaks 518 days after the halving, then that gets us to mid-September 2025 for a bull market peak. And conversely, if we see a 546-day rally after the halving, then that's going to get us to a peak of mid-October 2025. And just notice how if we were to just do this mirroring to the pre-halving period, we get very close to that bear market bottom of 2022 within a month or so. That's the error here, but it's really roughly mirroring the past. So this pre-halving period is effectively the same amount of time as the post-halving period. Fantastic to see these sort of phases take place. And so historically, that's what we could be looking at. Around 500 days after the halving, and around 500 days is a conservative estimate if you want to be scaling out of your positions a little bit earlier than what has historically been the case for a bull market peak. But this is going to be peak euphoria, peak parabola, peak FOMO and optimism, overconfidence, over-exuberance in the market, and peak greed as well. That's going to be the post-halving parabola. Right now, we're still in the pre-halving phase, but then we might see a period of slowing down in the buy-side momentum, and then afterwards, we'll probably see a parabolic rise to new all-time highs, and the post-halving period is probably going to last somewhere in the region of 500 days, according to these historical cycles. But let's look at the data science standpoint and perspective, because like I said in the beginning of this video, the pi cycle crossover between two moving averages, the orange 111-day moving average and the green 350-day moving average multiplied by 2, these two tend to cross over later on in a cycle to denote within a few days a bull market peak. This has happened many times in the past, and in fact, from my own personal experience and memory, I remember it like it was yesterday, that this pi cycle crossover was one of the few metrics and indicators that gave us a prediction that we were going to top out in the cycle, and indeed this did occur. Around this point in the cycle, we revisited those highs later on, upside wicked to new all-time highs nonetheless, but generally we didn't break beyond this resistance region, and this was indeed that peaking region. So one of the most important data science metrics and top prediction models that we can count on in this cycle, and any cycle really, if we look to the past, we can see bull market peaks timed quite nicely. Even mid-cycle corrections were quite timed nicely. Although mid-cycles are probably a thing of the past, But looking at these two moving averages, you can see that they aren't crossing over anytime soon, which just showcases the early phase of the bull market that we're currently in and enjoying right now. But let's talk about these two moving averages, because we can come up with a rough estimation. Where could Bitcoin top out in this bull market based on propagations of these two moving averages? So if we were to just propagate both of these into the future, that gives us roughly a late November, early December 2024 peak. And that is a little bit different to what we spoke about earlier on in this video of September, October 2025. And why is that? That is quite strange that we're seeing conflicting evidence here. Well, the thing about these moving averages is that they are dynamic moving averages. And if you were to just look at, for instance, 2023, then this moving average here was actually downtrending. This one was only beginning to start uptrending. But if you look at this moment in the cycle, both of them are uptrending. And given that this moving average takes into account more data, and as a result, this moving average is more sensitive because it takes into account less data, this one is inclining at a faster pace than this one, but nonetheless, they're still inclining and going up, flicking up quite nicely, dynamically reacting to price changes. So if we were to see a correction at this point, both of them would probably flick down, and this crossover would have to be pushed down the road. We'd kick the can down the road, so to speak. So these sort of estimations aren't very good ahead of time. I mean, it can help us prepare for these bull market crossovers in the moving averages, but we know that they're still a way away, so much time yet to be enjoyed. But nonetheless, this is going to change multiple times. If we see even further upside, we probably will see a bull market peak according to these moving average occur a little bit earlier. If we see a correction or even consolidation to enable an alt season, we'll probably see this bull market crossover get kicked down into 2025, for instance. So that's something really to take into account. But what's interesting about this crossover is that, of course, it's after the halving event, which occurs in mid-April. That's the event where we see a Bitcoin protocol shift, a fundamental shift in the amount of Bitcoin that get created every 10 minutes. The amount of Bitcoin that get created every 10 minutes gets cut in half. So it's a supply shock on this date, mid-April 2024. And what's interesting about this Pi cycle crossover is that it is, at this moment in the cycle, occurring 226 days after the halving. And the reason I mention this is because of this chart. And hold on, because this is going to blow your mind, because this is telling us 226 days after the halving is when we'll see a bull market peak according to the Pi cycle top indicator. If we look at an accelerated cycle thesis, because remember, as I've been talking about in previous videos, historically, we never see Bitcoin break this macro diagonal resistance in the pre-halving period. You can see that in 2016, rejection here, and rejections throughout 2019 and 2020 going into the halving. However, after the halving, historically, we've seen this macro diagonal get retested as a new support and break out to new all-time highs 215 days after the halving. And the same occurred in 2020. 215 days after the halving, we saw a retest and breakout to new all-time highs. So the fact that we're almost breaking out to new all-time highs 45 days before the halving means that we are ahead of schedule by 214 days plus 45 days. So that amounts to approximately 260 days. So this is quite interesting because that means that 260 is quite close to what this Pi cycle moving average crossover is telling us. But 260 also means that it's approximately half the amount of 520 days that we've seen as a bull market peak after the halving. Historically, 520 days approximately after the halving is when we see a bull market peak. This has been the case in the 2017 cycle, slightly more in the 2021 cycle, but nonetheless, that 260-day period is quite curious to me, because that's approximately half the amount that we've seen historically be the case for bull market peaks. So if that's half the amount, does that mean that this pi cycle crossover could be a little bit more true than we give it credit for at this moment in the cycle? Because that pi cycle crossover is saying to us 230 days after the halving is where a bull market peak can occur. And of course, we could see maybe a correction around the pre-halving retrace, and then this actually gets pushed into the future, and maybe we actually get more of a 260-day period, which would be even more confluence to suggest that we are accelerating in this cycle, and maybe we're accelerating by a factor of 2. So maybe we are accelerating by 260 days, which is approximately half the amount that it takes to top after the halving event, because typically 518 days is where we tend to see a bull market peak after the halving event. So if we're ahead by 260 days or so, then maybe we'll have to just adjust our bull market peaking tops and prices 260 days earlier. Isn't that interesting that we're seeing this sort of confluence? Because if this really is an accelerated cycle, it's accelerating by half the amount that it takes for Bitcoin to top in the post-halving period. So that's very interesting to see, and the pi cycle top indicator crossover is confirming that to an extent. This is still going to change, of course, because these are dynamic moving averages, each day giving us new information and each day giving us a different prognosis for a bull market peak in the future. But nonetheless, this was a very interesting exercise to just understand how the cycle could potentially be different while looking at a very accurate pi cycle top indicator that has historically, it's got a historical heritage of being quite the top predictor when it comes to Bitcoin bull markets. And it's important to keep in mind this pi cycle top indicator while also having an appreciation for historical price tendencies that haven't failed us yet, because in previous cycles it tends to be 500 days after the halving. Maybe we'll get the same in this cycle. And if it really is an accelerated cycle, maybe we top out a little bit sooner. But in this channel, we're going to be looking at this pi cycle crossover many times into the future. So subscribe to the channel if you want to keep in touch and have access to these insights and these different perspectives, because we'll be talking about them a lot in the coming months so that we can make the most of this Bitcoin bull market. It is a historic one. We've never seen Bitcoin break out beyond this macro diagonal resistance and monthly close beyond this macro diagonal resistance at that. So it is a historical cycle. It is going against the grain of history in that respect. So we need to talk about how different this cycle could be compared to the past. In any case, that's about it for today's video. Thank you so much for watching. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and I'll speak to you in the next one. Speak to you soon.